Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock with news of problems with perspectives. But first, in their latest survey of consumer expectations, 21% of Americans told the New York Fed that they expect to lose their job in the next year. This, of course, is a sharp rise and will fundamentally change the way household budgets are planned and spending patterns changed. Those surveyed also thought interest rates would rise from here as the federal deficit implications bite. As the US public debt approaches $24 trillion and seems to be rising at the rate of almost $4 trillion per year at present, it is wise to step back for a moment and just ensure we have these large numbers in perspective. We toss around terms like million and billion and trillion easily, but we basically don't understand the scale of these concepts. Here are two perspectives. If you stacked US dollar bills, 1 million of them would be a pile 109 metres high. And while that is a lot, 1 billion of them would be 109 kilometres high enough to reach into outer space. And 1 trillion of them would go a quarter of the way to the moon, up 109,220 kilometres high. Given the circumference of the Earth is only 40,000 kilometres, that stack would go around the world 2.5 times. The scale of 1 trillion is a complete other leg to 1 million. Here's another perspective. If a dollar was a second, $1 million equates to 12 days. 1 billion equates to 32 years. 1 trillion to 31,700 years, and far, far longer than human history. $1 trillion is an enormous amount of money, and the US federal government had a deficit in April of $737 billion, or 23,400 years at $1 a second rate. Enough. But enough to show that we're being overwhelmed by public debt from the world's largest economy. There's going to be a reckoning at some point. And of course, there is Japan, the EU, and China. Overnight, the Chinese reported that their total debt levels grew faster than anticipated, although at a lesser pace than in March. The US Treasury 10-year yield is now just on 0.72% and a 3 basis point rise. Gold was lower again today, down $6 to $1,697 an ounce. And oil prices are also lower today. In the US, they're currently just on $24 a barrel, a dollar dip. International oil prices are just on $29.50 a barrel, in a slightly larger sag. And the Kiwi dollar is a lot lower this morning too, down more than 0.5 cent to be now just on 60.7 US cents. On the cross rates, we're also lower at 93.6 Australian cents. Against the euro, we're slightly firmer at 56.2 euro cents. These overall slippages mean that the trade-weighted index is now at 66.8. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.